In this video, I'm going to show you the current dividend stocks I'm watching on the UK markets, such as the Ftse 100 and the Ftse 250, and this will be on the app Freetrade in April 2020. Over the last few years, the Ftse 300, which is a combination of the Ftse 100 and the Ftse 250, has performed poorly due to the ongoing Brexit situation and uncertainty around it. This has led to a lot of sell-offs in the market. And now currently, with the pandemic situation, which is ongoing and, well, it seems to be recovering, there's a lot of uncertainty in the market and it's definitely been priced in. So a lot of the investments in the UK space are very, very high value. So today I'm going to be showing you which of these I'm watching and I may potentially buy in the future. And there's a lot of high value options for UK investors, and it's best to have an arsenal of different investments that you can watch so that you can shoot and buy it when you need to. Firstly, I'd like to start with quite a controversial one, which is BT, British Telecom. So in the UK, they are in the telecom sector, and whilst they have a monopoly on the broadband, they've had a lot of difficulties in the recent years. And this isn't just due to the two main situations I spoke about. They struck a deal with Huawei for infrastructure and building 5G towers. However, that's been limited by the government, so they've had to spend 500 million on this and they can't get the full results. The company are constantly having to use their profits into rebuilding their infrastructure, which sounds normal, right? However, in the telecom sector, at least at the moment, they have to constantly just update the depreciating assets that they have. So yes, it is going to be just breaking even. Why we've seen about a 73% drop in the last 5 years for BT. And also knowing that OpenReach, it was nationalised by the government and made that BT couldn't use OpenReach to their advantage and had to have an equal for all of the other competitors, it really took a toll on BT. And usually the telecom sector is a sector that holds well in recessions. But at least with the UK telecom sector, companies such as TalkTalk, Vodafone and BT have all struggled. So at the moment they aren't really seen as a safe haven, even though there is a greater demand for internet at this time. However, it does have a very, very high dividend yield, and it is worth noting that. And I do believe this to be an unstable dividend. They've said that they've got no more plans to continue growing it, however they plan to keep it. And you know what, that's a bold decision and fair play to them if they keep it. Although even if they did cut it, right, or suspend it for a bit, it means they can put more of their money back into the company and then rationally completely change their infrastructure and rebuild up. If they started to do something like that, I'd consider investing in them again. But at least for the near-term future, I'm probably going to hold off. There is a lot of value to be gained from BT, but how do we know that it won't just continue to drop further? If you're interested in learning more about investing and personal finance content, it would be much appreciated if you clicked the subscribe button down below. Thank you. Next up on my watch list is Lloyds, and it is a very, very popular UK investment. A lot of the UK investors have already had their eyes on Lloyds or own Lloyds. Recently they've suspended their dividend, but they plan to resume it once this current crisis is over. Normally they've had a very high yield, and even in the future they plan to turn their dividends from biannually to quarterly, so you'd be getting paid 4 times a year. And this is a banking company that owns Bank of Scotland and Halifax, which are very, very limited to the UK, but they plan on dominating the UK market and expanding around the UK, and then potentially in the future they might look towards growing outside of it, but they're going to try and solidify on the domestic UK market, which is what I think probably has the greatest value at the moment. Certainty around Brexit, this means that this company has really, really struggled. And if we get a soft deal in the Brexit negotiations with the EU, this company will likely strive a lot. However, regardless if this happens or not, I do see Lloyds to be quite cyclical. So even if they are just a boring company, it just holds their value over the period of time, that would be fine with me, because with such a high dividend yield, which I believe they were paying something like 11% before they suspended it, with a high dividend yield like that, it has a lot of value for investors, because in 10 years time you'd have the money back from the initial investment, and a stable price would mean that you could continuously buy dividends, which win, right? I do see them to be at quite a low at the moment, and will likely look at buying them in the short near term future, as I need to diversify my portfolio and look for more in the financial sector other than life insurance. It is worth noting, right, and I've done a bit of research over the prices over the recent years. The lowest I've seen it drop in the last 5 years is 28 pence, and that was as of the 23rd of March, I believe, this year. And that obviously was the supposed bottom that we've seen so far of the pandemic crisis. And I haven't seen it go much further than that. The moment it had gone to 28p, and this was after announcing that they'd suspended their dividend, it seemed to almost go down for a day and then rally straight back up. So it might be worth noting that 28 pence could be the bottom for Lloyds investors. Whilst yes, in future it definitely could go past it, there are a lot of UK investors that are willing to jump on it at 28 pence. So it might be very close to a safe threshold anyway. So this could be a stock that you could buy at relatively low risk and then potentially grow to much further beyond its value. I really do hope in the next 5 to 10 years the UK banking sector or the UK financial sector has much more success, and in which case a lot of people are seeing a great return on their investments. Next up, I'd like to pick a typically defensive stock because I believe in times of uncertainty you would like to have a defensive stock in your arsenal or your portfolio. And this defensive stock is Diageo. This company produces lots of alcohol beverages, right? And alcohol is a market where I even believe the demand to be increasing. A lot of people in the younger generations are picking up spirits. Well, not too young, obviously above 18 years old, legal to drink. But typically they don't really drink as much ales or lagers, for instance, but they do like to drink spirits. Brands like Captain Morgan's is quite a popular brand that young people would drink. So I see the demand for spirits in the future increasing, and Diageo has quite a high count of different spirits. They've got Gordon's Gin, they've got Tanqueray, they've got Captain Morgan's, and all of these drinks are very popular. So they've got quite market dominance in the UK and further out across the globe. So I believe this to be an investment. Whilst they haven't lost much value, I believe that this is a lot of value because you're getting a safe, reliable dividend that they've been growing for 20 years. Whilst it's got a lower yield of 2.5%, at least you know in a recession they're very unlikely to cut it. They're also not going to be affected that much by demand. Say for instance at the moment, all of the bars in the UK at the moment have been shut down. So yes, you'd think, oh, alcohol isn't going to be sold as much. But then people are going to the supermarkets and buying the alcohol. So these companies, well, this company owns so many different brands that they're likely going into supermarkets and just buying the same brand anyway. So this means I think they're quite safe. They don't rely on either sector too much, and I don't believe it's possible where both the hospitality sector and the retail sector would both be shut down. In which case, yes, they would see a lot of struggles, but I do believe them to be a safe investment. And I think that this company has quite a wide moat. They keep acquiring different assets. So they acquire different brands. For instance, Guinness is one of the most popular brands. If they keep acquiring different alcohol brands and breweries, I don't see a reason why they couldn't keep growing like they have in the recent years, which has been above the UK market, and continually pay their dividend. This is something where I'm definitely going to buy in the near future. And whilst their dividend yield is low, you know it's reliable. So that's the trade-off you can get. And over the long term, they're likely to grow as well, so you will get a good return on investment. If you'd like to know what dividend stock I bought in April, click the card at the top right of the video, which details what I've bought on the Freetrade app. Overall, I'm likely going to be buying Lloyds and Diageo in the next few months. I believe these companies to be of high value and will help me diversify further with my Freetrade portfolio. BT is a company that I'm going to watch over the next few years because once I believe that they've restructured correctly, I do believe that they will start to see significant growth. I'm Osborne Foreman. Thank you for watching. Have a good night.